anyways, so into some real news. Not that the other stuff wasn't real, but I just don't want to say too much into it. And forgive me, I have a receding hairline. It's terrible. So I try and make sure my hair looks as good as possible. Because if you see that, my hair was not like that before. And it's killing me. Alright. So Japan raised its interest rates from 0.75 to 1%, a 31-year high. And this follows the European Central Bank's move last week to raise its rates for the first time in almost 3 years. Now, if you saw one of my other videos, we didn't raise our rates, right? We held rates, and I was thinking that we were going to go up, and I really don't know where this, like I did mention there is some nuance. The position is, AI data centers and all of that, but it seems like the infrastructure, or the pre-infrastructure, many of the deals largely have been done. There's a good layout for what needs to be done with the AI stuff, and there's a little bit more that I can get into, and I will get into here in a moment at the very end, but everybody's like, oh, we're going to cut rates. I don't know who, if you did everybody's just wishful thinking with that, truly. Everybody was wishful thinking with that. And it's surprising to see that Japan rose their rates because they're also largely affected by the Strait of Hormuz. So this is a prime example of what I mean by anything can happen. If you asked me, now I don't do enough research on who's running Japan's central bank or their banking industry, but if you would just say to me, do you think Japan's going to raise their rates? On the face of it, I would say no, and I would be wrong. But again, you look at a country where they are being largely impacted by fuel and a lack of fuel coming in. They basically already have inflationary effects going on. Why would they increase their interest rate? I would say I probably wouldn't see that happening, but it happened, right? And so what you need to understand about Japan's relation to us is they've had a notoriously cheap interest rate. So Japanese investment has been great. Not Japanese investment specifically, but utilizing the yen as a form of investment has been great for the United States. They're our number one U.S. Treasury holder. They use a lot of U.S. Treasuries for their pension system, I believe for their healthcare also. But with all that said, they have been making very big moves. They've dropped their ideas of peace. They're starting to build up a military infrastructure and export military arms. They're incredibly important to the chip manufacturing. They have, I believe actually I'm not going to say the business name, but they have a very important business there, and it's like one of the biggest bottlenecks to creating these advanced chips, and the increase of the rate also allows them to be competitive with other debt issuers, and apparently it's repatriated, meaning it's brought some business back to the country, some credit business back to the country. So, it's significant because they did sell some U.S. debt, but it's not like I'm not going to give my opinion on what could or couldn't happen. So it's not like I could tell you what's going to happen. And that's true. I mean, that's true. I don't know what's going to happen. Anything can happen, truly. That's like the biggest disclaimer right there, and it's true. Anything can happen. Preceding that, yes, the UK Central Bank Europe increased the rate. The UK did not increase its rate. So, but it seems that the central banks of Indonesia, the Philippines, and the Czech Republic all increased their rates on Thursday. So, anyways, what this means, so the United States didn't increase their rate and the UK didn't increase their rate. And I have my own idea on what this means, and it's not good. So this is complete theory and speculation. But if you watched my breakdown the last time, I mentioned that Iran hit a key military base that I felt was signal a potential that they believe that there's going to be a legitimate ground invasion. I should have saved this for the end. I'm going to table this for the end. We're going to go through some other stories, and then we'll, or the end of the stories for the week, and then we'll come back to that. So, I'm just going to do a quick copy and paste. So, anyways, and I do hope this audience understands this is meant to be listened to for the most part, but maybe I will put up some graphics and stuff because that does seem to do a little bit better. But anyways, there was a 4.4% decline in monthly visits to quick service restaurants in May. We've also seen that there's a 5% increase in hardship withdrawals this year, among 401k account holders. This is more signs that the economy is slowing down. And this is also largely the reason probably why a lot of people thought the Fed was going to cut their rates. Not going to happen. I really don't see that happening anytime soon. Personally, anything can happen, but I just don't see it. But what we're seeing here are some very serious indicators. Like we spoke about, credit defaults are up. We see higher declines in real estate insurance claims. We're seeing, and I don't want to get ahead of myself, but we are seeing, private credit who recently has made a big push into the real estate and mortgage space being investigated for, inaccurate funds. And you know what, I do have it right here. It increased to, I believe, now we're looking at four large credit funds are having redemptions collectively requested of $12 billion. So what we're seeing is a slowing economy, increased credit defaults, both private in the sense of institutional private credit loans, and then private such as credit card defaults. We're seeing a lot of indicators of people who could potentially just be trying to get out from under the situation. Maybe they can't sell their home. Maybe they were laid off. Maybe they're turning towards disability because they want to retire early, and the only way they can do it is to go on permanent disability along with whatever funds that they have. So, this is just more things to look at to say the economy is definitely hurt. And Trump had a quote that I'll get to in a moment, but it's interesting you go through all these. I went through this to try and make sure it would flow better. But of course, I'm sitting here realizing all the different stuff that's gone on. But yeah, I'll just say it, Trump literally said he didn't want to be, I have one, and this is a quote, I have one primary wish as president. I never want to be the late, great Herbert Hoover. Herbert Hoover was associated with the Great Depression, right? So he doesn't want to be like that, and realistically, that's what we're seeing. We're seeing that the majority of the economy is having some serious issues. So that's something to think about.